Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. We're taking a look here at Pepe, seeing what's going on, helping you understand best practice and big picture. And you got to keep in mind, Pepe is an interesting beast right now, and we are below some key level resistances. Just something important to recognize and acknowledge. Some folks yesterday were commenting about how incorrect the analysis was. Yeah, it wasn't 100%, but it is absolutely working within the same range that we expected. And that's just kind of standard trading stuff, right? So anything that you look at on the charts, I wouldn't say it's 100% foolproof by any means. No, no way. But it does increase your odds of success, right? Making you the house if you were to essentially compare this to, gambling, right? So all things aside, I hope that you are faring well and we can learn something here today. So what we want to look at is a couple of key factors. We're going to look at the larger time frames here, some moving averages, as well as redraw some Fibonacci retracement levels, kind of see where the price could bounce to if it does. Okay, we're going to take a look at that and a few other things. So if you're new to the channel, I love teaching people to trade. Hope you can learn something here. All right, so we're going to take a look at the RSI. We're not under 50 yet, so we're still in pretty good shape, right? So we got to keep in mind that that is a notorious strong support level. The larger the time frame, the stronger. Obviously, we don't have monthly or well, we have a weekly chart, but that's kind of funky. There's not enough candlesticks for that, right? Because again, it's based on a 14 candlestick lag. So that being said, though, when we look at the RSI, we're above 50. That's a positive sign. I would say though that's the only consolation we have. The reason why I say that is because if you look at smaller time frames, you can identify that we are below a specific resistance level. And you can see this pretty clear as day. Look how many times this was tested. Multiple times before it broke down, and now that's considered a resistance. So we can surmise that 165, 165, 163, really close to that range, is a strong resistance zone. Okay. Keep in mind also we're range bound between 148 and 163. Okay, so 148 to 163, that little range there is essentially where we're at, and that's kind of where we're going to be stuck for some time. Again, until the price actually can close above this resistance level, there's no reason for us to assume it's going to continue upwards. We're also below both moving averages there as well, and that's not a great sign. We take a look at the RSI, stuck under 50 on the RSI too, that's bearish, as well as a MACD convergence that didn't quite happen, got rejected pretty hard. And we see this happen a lot with Bitcoin, where the price comes up, it's supposed to converge, it's supposed to do all sorts of wonderful things, and then it just fizzles out because we get rejected at resistance. Exactly what we're seeing right here. Okay, so again, that's where support and resistance levels I think are probably the most important things you want to identify first, and then work alongside that with some moving averages, oscillators, indicators, etc. But for the most part, we are stuck underneath that level for now. Until we close above that, I don't expect any type of further increase. We want to kind of take a quick look here at these Fibonacci levels as well, kind of get perspective here that we can see this 0.236 Fibonacci level is a strong resistance. And of course, if we break above that, then the next target would be 170. Okay, so good targets for you if you're going to have profit targets to the upside. If the price breaks above that level, we're looking at 170 and then also 177. Okay, now keep in mind, you want to go just below those levels to ensure that you get filled, because a lot of times candle wicks will just jump right to that level and reject. And if you don't have a profit target just below that area, then you're going to have trouble getting filled. Just a little strategy that I use consistently. So that's where we're at on the 4 hour. So 4 hour is bearish. Daily is also mostly bearish. While we're above 50 on the RSI, we lost the 20-day simple moving average. Okay, this is an important indicator. It's like a trend setter. So just to note, being below the 20-day SMA, that should work as a resistance level now for the immediate foreseeable future until we break back up above that. Or the 50 comes around, whichever happens first. We'll probably more likely retest the 20 before the 50 comes around because we don't have enough trading data yet. But that's kind of where we're at for the moment. All right, so let's go ahead and see what the 1 hour looks like. We're going to go ahead and quickly peek at TD sequential and see if we have any overextension. We did have a previous overextended state here recently. And of course, the price comes up, rejects off this level multiple times. So you could speculate that the fact that it's retesting that level multiple times is due for it to break above. That's true. That could happen. But we have to see higher lows first. And right now, we see two parallel lows with a potential higher low. So until this swings upwards, we don't really have confirmation that the price is going to continue in that direction or retest this level. Okay, so again, that's where it's important to kind of pay attention to those kind of patterns, specifically on the hourly. The hourly is the best time frame to kind of see that. We're not seeing it yet. Based on Ichimoku cloud, we are still below the cloud. And this works concurrent with a descending trend. You see how the line that we have drawn out here, that we have kind of sort of broken above so far yet, is showing that the resistance level is also concurrent for the actual Ichimoku cloud. So again, that's why it's important to break above this level. Look at how the cloud is kind of formulating itself or averaging itself out right there at 160, 161 range. We can close above, just say 163. That's where we need to be. Okay. So I'm going to go ahead and set an alert here, or just say the 163 range. So when we retest that again, if we were to break through it, we're likely to come back down to retest as a support. So just say hypothetically this is the new low, right? And the price comes up and breaks through that resistance. It's very common for the price to come back down and retest that level one more time to see if it continues higher. At that point, that's a great time in which you want to take entry, because then it's confirmed that that's holding as a support the previous resistance. Okay. Again, a lot of what I do in trading and what's kept me successful over the years is understanding established support and resistance zones, and also candlestick and daily closures. So we got to kind of pay attention to certain things. You can look at this here as well. It makes it a little easier. We can see today's average true range. We're pretty much right there at that level. So there's a good chance we could see further upside if this is our new low. Okay? So if this is our new low here, right where we're at right now presently, we don't go any lower than 157, then there's a great chance we're going to surpass the 163. We're going to retest 162 as a support and continue higher. Okay? So by no means am I calling this bullish at all. We have a tremendous amount of bearish qualities on the 4-hour time frame. That's not good. We need to have consistency on the 1 hour in order to translate to a positive 4-hour candlestick, right? So at this point, I don't foresee any immediate breakout potential, but I do think that there is a good chance that we're going to continue higher if we break through this resistance level. If not, you got to keep in mind, we keep retesting this zone here at about 148. We leave this support zone, we might see a free fall again like we saw previously. Okay, so keep that in mind. We're not in the clear yet, but it's looking decent on the hourly, but not so great on the 4-hour. So you can make your own conclusion on what that means. To me, that's an indication of not buying right now and waiting for confirmation. And you can bat your head, bat your eyes, whatever you want to do at me if you'd like. And if you don't like that strategy, that's fine. But there's a reason why I've survived the markets over the years and not lost tons of money and made a lot more over the years. And I can tell you, it's mainly just because I'm patient and I wait for the right opportunity. Okay. Again, different strokes for different folks. It's okay if that doesn't work for you. Go ahead and jump in, buy the dip, and see what happens. Let me know how that works for you. It does work sometimes. Just know it's not going to work all the time. I hope that works well for you. Best of luck either way. Thanks again so much for joining me here. Once again, I greatly appreciate you like, follow, and subscribe to our YouTube here. Greatly appreciate that. Enable notifications too, so you can be up to date on these awesome videos here. Right? All right. Have a great rest of your day. We'll see you soon. Take care. Thank you.